Well, good day, traders. This is Dennis Wilburn with the Active Trend Traders. I've been sitting here prepping for our training for tomorrow night on Wednesday, March 15th. And I was going over, I've been looking at the what I'm calling the go, no-go indicators. We're going to be doing part one tomorrow night. But it was so impressive, I wanted to share a quick taste of what we're going to be covering in tomorrow's night's training. So I want to remind everybody that all the materials we always present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. And what we're going to be talking about with these go, no-goes is basically it's a moving average. And we're going to talk about the pros and cons. Moving averages are really great. Traders have used them for a long time to measure both momentum, define areas of support, resistance, areas of interest where you want to take action on a particular entity, be it a stock or an ETF. Moving average are basically just simply calculated by averaging the value of securities price over a specific set of time. They may throw in some exponential where they are some weighted numbers, but it's still just a moving average. The tool's main weakness lies in how it's calculated, because it is an average computed using prices from the past. Moving averages will tend to lag current price activity. You can try to overcome this by going to a shorter time frame moving average, but that tends to be, for higher responsiveness, but that tends to provide jagged moving average moves and a lot of whipsaw. And then secondly, the longer time frame lead to less responsiveness, and you wind up missing part of the move. So remember, regardless, even what I'm going to show you just in a moment, no moving average is perfect. So what if, and remember, no moving average or indicator is ever perfect, but what if there was a simple moving average that was more timely, provided visual clues when trend and momentum changed? This particular moving average could provide a go, no-go indication for traders and get them in closer to where the trend tends to change. And that could be go, no-go for both entry and exit, which would capture the majority of the trend chain. What if it was as easy as following either a red or green ball? What if it could be used in conjunction with the other clues that the trend was changing, such as the TSI or the momentum, which we utilize with the active trend trading system? Well, here basically is the concept. This is a chart of Tesla today. It's a daily chart, and you just follow the little, the bouncing balls. When it changes from red to green, it typically means a trend is changing. When it changes from green to red, it means the trend change is in either a pullback or is reversing to the downside. So it's great for timing when combined with the TSI. Let's take a look at that. So there's a red to green. And the essence of it is basically you wait for a green candle to close above a red ball, and that's your indication that it may be time to get into the trade. If it's accompanied with a TSI, what I call a TSI tick up. TSI rollover changes from green to red. The trend is changed this way to the downside on Tesla. TSI rolled over. And then on some of these intermediate moves where it basically is just on a pullback, on these, if you just wanted to take the profit off of this run here, you would wait until you get a red candle closing below a green or red ball, and then if the low of that candle is violated, that's your exit. Pretty simple. Again, triggers you back in with a green candle above a red ball, and then that's your trigger to get back into the trade and just follow it. And as I said, you wait for the close below a red bar closing below the green ball, and away you go. Similar thing up here. Profit turns and or pullbacks for another move up. So that's the essence of what we're going to be talking about tomorrow evening, and you'll get the rest of the details on this particular go, no-go indicator. It's a moving average, and how it combines with the rest of the active trend trading stuff. I want to remind you, if you're taking a look at this, hey, check out active trend trading. The active trend trading monthly membership includes text and email alerts for all 3 of the active trend trading strategies. One of those is a portfolio building strategy. The other 2 are option strategies. You save $22 a month, and if you become a member, your price, whatever you sign up at, will never go up. And then we have another service called the Early Warning Alert Service, which focuses primarily on the index ETFs. And this is a yearly service that is basically by the year. And right now we have that at a value of $3.99. You save more than 60%. So if you want to know more about this, you can go to this website here, activetradingtrading.com/monthly-membership-introduction/. So again, tomorrow, special webinar. Now this is basically the regular training webinar that we do on Wednesday nights, but this information I'm going to be putting out I found it so powerful, I want to share it with as many people as possible. So we'll be live tomorrow night, March 15th at 6:30 Pacific Daylight Savings Time. And for your invitation, you can either email me at dww@activetrendtrading.com, or you can visit the website. Well, here's another website. Visit the Active Trend Trading Facebook page at www.facebook.com/activetrendtrading. And you can find the invitation there, and the invitation on the website looks kind of like this. There you go, activetrendtrading.com, and you just find this post, Wednesday ATTS midweek training webinar. And again, I am offering this to everybody who wants to watch this video and watch tomorrow live, and you will have access to a recorded version of it. So shoot me an email or just sign up online. With that, see you tomorrow night. God bless everybody.